This is Fernando. Thanks for clicking on this video. Ever put on a blindfold and attempt to walk around and not injure yourself or others? Or how about walking in a thick fog? Well, trading without certain markers on your chart can be similar to walking or flying in a thick fog. And this is just plain dangerous for a new trader. Today, we're going to explore 2 essential tools that every trader should have in his or her tool bag, plus this week's coming events that may impact the markets. Let's go. Just the usual disclaimer, trading is a skill that can be learned and eventually mastered. It will require a substantial investment in time and money. You will not get rich quick or figure it out in a week or a month. Trading is very risky. Futures trading is very risky. Chances are you're going to lose money. Why do I say that? Because you will. We all have. One thing I realized, which I wish I would have realized earlier, is that timing the market is next to impossible. So trade only risk capital. This channel was created to show some things that work for me. They might work for you, so please do your own research. Okay, enough preaching. In the previous video, I spoke a little bit about these NQ zones. I wanted to just do a quick follow-up before I get into the current topic, and you can kind of tell. Well, no, you can't. You can't kind of tell. You can definitely tell that these areas are very important. So when you see prices go into these hundreds and 50 areas, you know that if you're long, you might want to hold on a little bit more. And if you're short, that's certainly a target area as well. Let's go into maybe a 5-minute chart, and just so that you can see how important these zones are. See right here, it got to that area. It stayed here for a little bit, sold off, came down to about the 12s, went back up to the 20,000s, came down to the 50s, to the 950s, went back up, all the way up here. So definitely something to be aware of. In this video, I'm going to speak a little bit about 2 other markers that are very, very important. And so let's get on with that one. One marking that I have to absolutely have on my chart is settlement. I have to say that I'm pretty amazed that I see so many traders that enter positions and not know where the settlement price is. It's insanity, in my opinion. Settlement has really become my best friend of sorts. This marking on my chart is perhaps the most important, if not the second most important, as an intraday trader. For those that are unfamiliar with this, as I was some time ago, the settlement price is the level or the price that the market closed yesterday or the previous session. Now, why is this important? Here's what the CME has on their website. All I know is that whether you believe that there might be some market manipulation, or in Adam Smith's words, an invisible hand at work, after you watch the market so long, you begin to realize the price ultimately will be drawn back to the previous session's settlement price. Now, I don't mean that this will happen every single day, but uncanny, it does happen quite a bit. Let's look at a few examples where the market opens and where the market returns at the end of that intraday session. Just so that it's not looked at as a cherry picking kind of thing, let's go back 60 days. And this is the 5-minute chart. I usually don't trade the 5-minute chart. I trade the 1-minute chart. But for this demo, let's take a look at maybe a couple of weeks back. You can kind of see. This is probably, let me see, this is May 27th. So this is where the settlement for this session occurred, right in this area here, which was about 19,136. This is where the open was. It rallied a little bit, came back, sold off, came back to the settlement, and it pretty much stayed there pretty much overnight until the opening of the New York session. Another example. Here is where settlement closed the previous session. Overnight, Globex opened here. It rallied, came back to the settlement, sold off a little bit, came back, pretty much stayed right there. In the overnight hours, it rallied about 40 points, came back about 20, rallied. Then at the open of the New York session, it rallied, came back hard, and look at where it came back to. It's uncanny. You can't deny it. You'd be you're burying your head in the sand if you don't look at this in an objective way and see that price is going to come back sooner or later, I guess, not always. The second most important marking that I have on my chart is the Globex Open. This is probably only secondary to the settlement. In my experience, it's one that I need to always pay attention to. And this is, I add this by using the current day overnight open, high, low indicator. It's an indicator, but I don't call this an indicator because it's not really predicting anything. It's just marking something on my chart. And what I do is I take the show and the show high, show low, and I turn those off. I'm only interested in the open. And so let's go ahead and do that. If you're following these videos, the previous video I only showed these levels, and slowly I'm showing certain markers that I add to my chart. As I mentioned before, I don't like cluttering up the chart with indicators and moving averages and all these other things. But there are certain markers that I do have that keep me safe, if I can use that word loosely. So this is the overnight open. Let's go back maybe a few weeks again and take a look. This is looks like this is May 10th. Here's what it opened. There's the settlement. I think we looked at this a little bit in the previous example for settlement. So let's take a look at a different one. Here's this one here. This is settlement happened here for the previous session in extended trading hours, or I guess in that hour right before the official close, when the market closes. It sold off a little bit more. By the time it opened at 6 p.m. or 3 p.m. where I am, it was down here in this area. And so as you can see, this is another important price to take into account. As you can see, the price rallied a little bit. It quite didn't want to go back to the settlement, but it did hang out here where this opening price basically was. At the open of the New York session, it started to, volatility started to pick up, and then it rallied, my goodness, 50, 100, 150, 200, 250, almost 300 points. But like I said, uncanny. The way this happens is that once it fails to find any more buyers or sellers, if it's the other way around, price comes back. And in this situation, it sold off hard, just as many points as it had rallied, and came back to the settlement. It did a little bit of a consolidation right there. This is the 5-minute chart. If you would look at the 1-minute chart, you'd see that there's a lot more activity here, obviously. And then it just continued down to where? The opening price. And then it hung out there. So hopefully this gives you an idea of certain markers that are important to have in your chart. and to keep in mind as you're trading, as you're looking for entries, as you're looking for targets. These are very, very important areas to always consider. And finally, let's take a look at the week's economic calendar. This is for June 24th through the 28th, 2024. I use investing.com. There are a few other good ones. Forex Factory is another good one that's very popular. I've been using this one for forever, probably since day one, so this is what I'm used to. I have it set up so that it filters out only the economic news events for the U.S. and for the indices that I trade. We'll take a look at this for the week. It looks like Monday there's not anything that will move the market. Anything that has 2 stars, 1 or 2 stars, typically does not move the market, even if it's a Fed speaker. This Fed speaker is not the granddaddy, so typically Jerome Powell has a 3-star next to his speaking events. Those are the ones you want to make a note of. Tuesday, we have consumer confidence report at 10 a.m. That one will move the market. Beware. Wednesday, if you're an oil trader, at 10:30, that will move the market. New home sales at 10 o'clock, 3 stars. That one will move the market. Thursday typically is a heavy news event day. Durable goods. Before the market opens, GDP, that will move the market. Initial jobless claims as well. And then Friday, rounding up the week, is core PCE. That will move the market. Chicago PMI at 9:45. Core PCE is before the market opens. And then at 11 a.m. Eastern time, there's a Fed monetary policy report. It seems like we had one of these last week and it didn't do a whole lot. Just keep it on your radar because it may or may not move the market. That wraps it up for this week's economic calendar. If you found value or entertainment in this video, consider liking and subscribing. Now it's your turn. Open your charts and test these ideas out for yourself. You might begin to see the market in a different light. In all things, do what you love and love what you do, be it a plumber, teacher, nurse, electrician, or ballerina. As for me, I prefer to trade.